Lars, it's great to be with you.
Same
And
here.
it's been an incredible year if we think about, where we've been over the past 12 months since we did our 2024 summit, which, by the way, very proud of what we've done the last couple of years. I think we've been very accurate. I mean, our presenters have all basically told the story ahead of time, and it's been impressive.
Yeah, we are here now for, I don't know, 4 years. We are hosting these kind of events. So it's quite impressive going this year by year and even improving
Indeed.
our techniques.
And we also published Cycles, The Mysterious Forces That Triggered Events. That wasn't out last January of last year. That came out um, in the spring. So that was a big accomplishment this year. I think what I'm most proud of, though, is that we really have enhanced the core technology of the foundation. And over the course of the past year, I really have been spending time in the archives, and it's been clearer to me how important that technology is to the foundation. That Dewey set out to develop a science of cycles, and this is basically what he arrived at: is we need this tool, we need this ability to detect cycles in all kinds of data
Yeah, I mean, it's
in
just,
order to, have a science of cycles, a data-driven science of cycles.
yeah, that's what we are bringing to our members. So I think the tool set, and we're even not stopping here, no? Right? I mean, what we have on the table for this year and even improving that, looking also bringing AI in and improving the tool set to identify cycles was not only an interesting way up to here, so it will also be interesting now moving forward from here.
Absolutely. And I know you're going to cover Bitcoin cycles today, which everybody always loves. So I'm not going to take up much more time here. We'll let you get to it, and we'll take some questions and maybe chat briefly at the end. I know it's pushing midnight where you are. So why don't you go ahead and get started, Lars, and we'll get back together once you've put out the main information.
Thank you, Richard. Always a pleasure to be here. So welcome everyone to this slot here, and let's talk about Bitcoin, crypto, and for sure cycles in that asset class. I mean, if you're following my work or our work sharing here at the foundation related to crypto and Bitcoin, I'm sure you will find something which you already have in mind, which is still important. So what I want to do with you today is, I think the first section is about knowledge. What is important if we talk about cycles in crypto and Bitcoin. So I will give you a quick summary on the key areas you need to look into. So also then to dive into your own analysis. And be aware, I will put something new on the table, even if you have followed the Bitcoin workshop and all the topics during the last financial summits, there will show up one new subject for today. So even if you are a long-term follower. And then in the second section, for sure, we will do an new and updated cycle analysis on the current situation. And last but not least, I will share with you what I call my master chart on Bitcoin. So where I will put all cyclic information in one chart. And with that chart, finally, I will look into 2025, what I see for Bitcoin ahead of us looking into 2025. That's the subject for today. So the chat is open. So you're always free to put your questions in the chat section. The colleagues will help us to sort them out latest when I'm done. So maybe I will not have the time while I'm talking. I try to monitor, but latest at the end, we will come back to your questions. So feel free to put in questions related to the content I'm just sharing. Said that, and it needs to be said, this is my personal view. It's the cycle analysis, and as said, it's just sharing for education purposes. Whatever you do with those findings is then up to your own. I will not present any financial advice, and I will not present any more market forecast, which should be taken into account by you one by one. You need to do your own analysis, risk assessment, and your own decision making. So set that up front. I think that's the obvious. Let's dive into the topic. First, maybe 10 minutes are the 4 most important cyclic components, which I do take into account and you should take into account when you're dealing especially with Bitcoin. And that's a quick summary, what I often share here on Bitcoin and have learned during the past. Oh, sorry for being so quick here. The first topic, and you know about that, what goes up must come down. There is a nominal 200 days cycle in the price of Bitcoin, which is visible prior to every parabolic move in the past, prior to the top and after the top. So that's a finding which I shared very often here on this channel, so I will not go into the details. We discussed this in the Bitcoin workshop, but a nominal 200-day cycle is always an important cycle to look out in regards to the variation of the length. So do we have a similar cycle like 180 to 220 days? And what is the current phase with that cycle? That's always the first you should look at if you do daily analysis on Bitcoin. Through all the history, the 200-day cycle was always important at major tops and major bottoms. And in particular, it was also important to find the end of a parabolic up move and to identify the end of a parabolic down move on both sides of parabolic moves. I also shared this here very often, so it's just a one-pager to summarize that finding. If you have identified this 200-day cycle, being 180, being 220, whatever the current up-to-date cycle is, that might vary as cycles are not static. But then you can count the iteration that the final top of a parabolic move will in most cases, on all cases we have on Bitcoin, happen at the 5th repetition of that upswing cycle. Yeah, that's quite interesting to identify that pattern, and similar for the key bottom to expect. So once the top is in, you can count 3 repetitions of the bottom, and then the final bottom or the end of that down leg for that parabolic move is in place. And then the next count 1, 2, 3, 4, 5 to the upside starts. So this pattern of 5 and pattern of 3 is also visible at all parabolic moves in the past. And we had a lot of parabolic moves. If you go back to even at 20 cents of Bitcoin, going up to 10 euros or whatever, there have been, I think, 5 parabolic moves already in the history of Bitcoin. And each up move was, I think, 10 to 100, so 10x to 100x to the upside, and often then losing 70 to 90% on the right part of the parabolic move. So this count is important, and more important to know on which side of a parabolic move you are and when this will be end. So that's the second key you need to have in mind when dealing with cycles in Bitcoin. Third topic is seasonality. Seasonality is always an important topic when talking about cycles. So seasonality is just how the calendar year behaves on a kind of asset class. So the seasons during calendar year, it's also related to the sun. Yeah. So, but it doesn't really matter. So how does this asset class behave during the calendar year? The average of how Bitcoin is behaving during the calendar year. You will find this public on different platforms. So this is just one example, where you see the upswing period from January to May. There is a positive upswing in Bitcoin. Then we have a more sideways phase in the summer into August. Then a negative phase from August to late September, early October. And then often in October, beginning of October, the next seasonal upswing starts until end of the year and then continuing into the next May. So that's the seasonality, the cycles of seasonality in the calendar year, which is the third topic you need to take into account. And specific to Bitcoin, there is another seasonality, which you always should have in mind, which is special to Bitcoin. It's the halving cycle, which is a season on the blockchain, which happens not fixed to 4 years, but close to 4 years. I will not go into the calculation, but related to that halving cycle, approximately every 4 years, there is a pattern around that halving cycle, which is shown here in the lower right, which just in short term tells you that the first 100 days after an halving, almost nothing really happens. So don't expect anything spectacular to happen after the halving took place. But then if you go into the period from 200 to 400 days after an halving event, then this is the period where you have the 10-time increase often in price seen. So when you are in that season, which means 200 to 400 days after a halving, this is a very positive seasonality for Bitcoin after each halving cycle, which is special seasonality related to Bitcoin. So this is the third topic. You have 2 seasonality subjects you need to take into account, the calendar year and the halving cycle. And now this is something new to the group here, which I never shared in that way, and it's related to the work of Michael Havel, which is deeply in the analysis of global liquidity, so money, where we also have a key cyclic relation between global liquidity and Bitcoin as an asset class. You see, first of all, in the lower left, there is a cycle in global liquidity. So that's not just global liquidity. There is a cycle in global liquidity, point 1. Point 2, on the right-hand side, you see that there's a high correlation between the global liquidity and the price of Bitcoin, which can even be nailed down on a weekly and daily basis. So this is the fourth topic or subject where we have cyclic behavior related to global liquidity. As Bitcoin is now becoming a global asset class, it's not anymore just a small niche. It is a global asset class, and we see, or Michael has revealed that relation and dependency, which is also cyclic behavior, as global liquidity works in cycles. To be honest, that data set is not easy to get, because where do you get global liquidity from? But this is just the primer or the intro. If you deal with cycles in Bitcoin, every cycle analyst needs to take into account those 4 subjects: a nominal 200-day cycle on the daily chart, the pattern of 5 to the upside of this 200-day cycle, pattern of 3 to the downside, to identify and detect the length of each parabolic move. Third, seasonality, calendar year seasonality, halving cycle seasonality. And fourth, the status quo of the global liquidity cycle. If you have made your homework on those 4 areas, you will be able to derive your cyclic prediction for Bitcoin. This is what I will share next to you, but at least from a knowledge perspective, this is what I would encourage or everyone, please look into those 4 areas if you want to become your own cycle analysis. So this is about teaching how to fish. I don't want to just give you a fish. I think it's even more important that you learn how to fish. But now let's try to get a fish in the next 20 minutes here. So basics, knowledge, done. I don't go into the details here. We did this in our Bitcoin masterclass workshop, but I think this is important. You should be aware of. So maybe if you're new to our financial forecast, this is not the first time I'm talking about those cycles and sharing with you the latest stage of those cycles. We did this here initially in 2021, so we have now 3 years in a row where I'm showing you the concept and showing you the forecast. So we now have some kind of history time-stamped where we can have just a quick look on how this concept worked if we just look at the previous past. This is the initial analysis I did in the 2021 financial forecast. So this golden line here, which is May 2021, this is where when this 200-day cycle has been projected into the future, it was updated here 2024, but not the cycle. So this analysis of the 200-day cycle was shown 2021. By assuming that there is an outstanding upswing cycle. So here we have the question, okay, is this the start of the down move, or will we see another up move into the 5th repetition? And we did the projection that we will see another upswing into the count of 5 before Bitcoin will finally move down. And then as said, this prediction was our 2021 with the 200-day cycle. We said you need 3 repetitions to the downside. And we have discussed here early 2023, and I think there was a big headache in the crypto community in early 2023 because we have 2 years of just downside move from 60K to even 15K here. And we have come up with this, that's the winter end. I think we called it the $1 million question. And we told you early 2023, change is coming. This is the last time. And I think I said until May 2023, you will never see those prices again. It's live, it's time stamped. It was free here, trading at 20K. I mean, who is now not dreaming of buying Bitcoin at 20K at that point in time? And you can now move to the right. So, long story short, I made already the projection back in 2021 here. So, but for sure we will update this and I will bring some other stuff into the mix. But it worked perfectly. It worked quite nice since 2021. So, I don't know. We need to see if that cycle is still there, what has changed in the cycle. We need to bring in the seasonality and all the other stuff. But that's the core. The 200-day cycle worked almost perfect since 2021, since we initially shared that with you here. All right, so never change a running system, at least if we still detect the cycle here. So this is exactly the 2023 Financial Summit. Change is coming. Where have we traded? 15, 16K. We moved up. This is here early 2024, so 1 year ago. We have been here again. I just said the summer period is starting. So 46K. A lot of had been fearful. Okay, Bitcoin even doubled at that point in time. But we just said here early 2024, summer period, not the calendar summer. The summer for Bitcoin has just started. So now we're sitting here even out of the chart here above 80K at 90K, asking ourselves where we are. So this is just to tell you that this model helped us nicely during the past 2.5 years already. So where are we today with just summarizing the situation? What do the cycles tell us in specific for today, just sitting short below the 100K mark? Therefore now I will switch to you with life cycle analysis. So I will now switch from presentation into some life cycle analysis. This is just the quick snapshot where we are today. And this is the 194-day cycle, which is the current length of that cycle. So as said, we still identify a nominal cycle around 200 days. Specific today, it's 194 days. That is the nominal cycle, which has just topped out here since late 2024. And just purely looking at this single cycle, and I will add more now as we move forward, we are now in that downward leg into February, March. We will see it in a second here. Without knowledge of the count of 5 and count of 3, we just would conclude this is a topping cyclic situation here and expect a down move here maybe into February. However, and you don't see the count here, but if you do the count together with me here, so after the down move took place here, so 1, 2, 3, this was the bottom, we start to count 1, 2, 3, 4. So the top late 2024 was just the count number 4. So if this pattern repeats, we still have an outstanding final up leg to expect, which kicks into February, March, and then runs into summer this year. So that's quite the more important point looking at that. And if you know how that pattern from 1 to 5 works out, that these situations, so the downswing phase of that nominal cycle in most cases just resulted in a kind of sideways movement. So the upswing was paused during that downswing phase of the nominal 200-day cycle. It happened here. It happened almost here. So during those phases, you don't maybe see a big drawdown, maybe sideways. I mean, we have high volatility, that's for sure. There can be swings, but in general, maybe this is the last chance to join the final upward push, which is still to be expected. So maybe we hover here around 90 to 70K. I even don't think we will go as low as 70K. So, but everything around 90 or below might just be a good opportunity to join before the next upswing might kick into the summer period, because we still expect the count of 5 to be completed this year. And that's also a final and important information. The count of 5 will come to an end in 2025. That's also, so we are in the final up leg, which is still to be expected. So from a technical perspective, we're just fine. You see it at the bottom of the chart here. So the technical indicator has still some room to come down for the next 4 weeks. And this would be even a positive confirmation if in 3 to 4 weeks from now, from the technical indication, we might see a bottoming indication, which is then in alignment with the timing of the nominal 200 days low cycle, which is then even more confirmation to be prepared for the next upswing. Okay, so that's the simple view of the 200-day cycle. And now I will switch to some live analysis here together with you to bring even more to your attention. For just switching screens. All right, so let's do some more fancy stuff here to bring you into the room with some more long-term analysis. And therefore, everything on the 200 nominal day cycle is set. I think you got it. You know where we are. So now let's do a little bit more complex cycle analysis. And therefore, I did the following. So first of all, long-time analysis on a weekly perspective is not something we could do because we don't have enough long-term historical data to do reliable weekly analysis. Therefore, instead, what I did here is I use now the history going back even to 2010. So this is what we have, but maybe not enough for a weekly analysis. First, let's switch that to a log scale. Yeah, that's the first thing. So it's the same price information, but on a log scale, you see that we have more or less a straight upward line here, which is log scale. We have an exponential move here, so it's more easy to see on the log scale here. It will not change the cycle analysis, but it will make the picture more clean. And this is what I did here, and this is what I've not shared before. To see a more higher level on that analysis, I aggregated that information by 4 bars now. So weekly analysis will consolidate 7 bars into one weekly bar. Now weekly is we trade Monday to Sunday, so we have 7 days on a daily chart. For weekly analysis, we consolidate 7 bars into one, but we don't have enough to do reliable weekly analysis. So what we can do in our cycle analysis platform, and that's something I have never shared here, so that's something new, to get a different perspective, we can aggregate the data on different levels. And 4 bars is just something the platform can just do right on its own. So if you have hourly data, you can have 4 hours. If you have 20-minute data, then you have 4 times 20 minute. So I mean, I think you see the topic here, just aggregating 1 bar, which is 1 day, into 4 bars. So this every 4 days, we generate a new bar. So this is just aggregation of data to get a higher perspective instead of weekly, but even better than a daily long-term perspective. So that's the spectrum we see here for Bitcoin on 4 days time frame bar chart. That's important here. So therefore, the numbers you see here on the right, these 49, for example, at the top, is 49, the length is 49 4 days. So yeah, which means if you want to convert this into daily again, so you need to multiply it by 4. So which brings us to the 200-day cycle again. That's kind of interesting. So that group here, what you see in the lower left, which is shown as the most dominant cycles here, so you see this also by our ranking, is just in aggregation or a different view on 49 days, which is that one here, so which is multiplied by 4, 200 days, or close to 200 days, and even the longest one here, which is then, or not the longest, but the other one is 57 days, which is also multiplied by 4. You will land at the nominal 200-day cycle, so shorter term cycle and a longer term cycle, but both show you from a longer term perspective. These are the 2 long-term variations of the 200 days normal cycle, now seen from the perspective, so a higher time perspective on the 4 days aggregation. So there, if we just see this as a composite overlay, we see more or less the same what we see on what we saw on the daily chart. No surprise, by the way. But this is so the basic 400-day cycle, a 200-day cycle, just seen here from that perspective. What's now quite interesting is, and it's similar to the 57, so it doesn't matter which one you pick here to keep them, but if you now combine and build a composite of those 2 here, so the 49 and 57 4 days cycle, it's a quite interesting picture if you zoom out a little bit. And this is what I want to bring to attention. So this is now a composite cycle here. I will even make it bigger. So this is now a composite cycle of the variation of the 200 nominal day cycle seen from an aggregated 4 days dataset perspective, showing you the shorter nominal 400-day cycle, 49 multiplied by 4, and the longer term cycle, which, if you have that composite view, that's quite interesting. So you see times when that composite of that variation of those 200 nominal day cycles is aggregating into those key peaks here. And then you see periods in time when those cycles phase out each other, like noise cancellation. So that cycle is almost not visible. And then, they aggregate on top of each other until they have their highest amplitude, and then they cancel out each other until they arrive at a point where both cycles canceled out each other completely. And then, the cycle of those 2 cycles repeats. And this is what I want to dive into a little bit even more, because if you draw something on top of that, this is also another cycle which can be seen here, which is going in those maybe it's not the best here, but you see what I'm trying to do here. So there is some kind of longer term cycle seen in the combination of those two cycles, which if you measure that, so we could measure the distance from these tops here. So let's do this, by the way, just in short. So if we measure those distance here, let's do it. You see it's around this 300 something bars, which is this cycle here, but that's not a single cycle on its own. And if you follow Dewey's work, that's also a false cycle here, because there is no internal 304 days cycle. So this is in days, it would be 1,200 or 1,300. So we could not measure that on a daily time axis. So the length of this cycle is here 313 multiplied by 4. We will arrive at a cycle length of 1,000 something, but this is not a cycle on its own. This is just the aggregation of the variation of this nominal 200-day cycle. First topic. What is more interesting, let's zoom in here a little bit, is maybe you spotted this already. Let's zoom out from a main perspective here, and maybe we can also to visualize this in a different way. I will just show this as an indicator here. So this is what we also can do. So instead of overlaying that on the whole chart, I have just now crunched this composite cycle in an indicator view. Yeah, it's the same visualization, just put on a single indicator line. And what you see here is once this cycle phases out each other, this is where the key lows happen. Same here, which is happening here, and then same here, which has been this low here. So when these cycle cancel each other, we have that consolidation and bottoming areas here in Bitcoin. Same here. When then they swing up each other, it's like when they reach their high point, then we also have the exponential. Beware, this is a log scale here. This is then in most cases when the exponential top came in. So you see here we have the highest amplitude, which is here on that, and then you see the same here going up here. So here we have the highest amplitude. This is where then the top also is to be seen. So just from that perspective, it sounds quite interesting that this is this parabolic movement. And even more, you also see the count of 3 and count of 5 if you closely look into that combination of this cycle here. So once they phase out each other, so here you start the next swing starts. So you see 1, 2, 3, 4, 5, right? So here's the number 5. So then we count down. So 1, 2, 3. Here's the 3. So now you start, the next swing starts here. 1, 2, 3, 4, 5. Here's the 5. So, and you can go back in history. Here is the top. So here you can count 1, 2, 3. Here's the low. Here. Now we start to count 1, 2, 3, 4, 5. Here's the top. So that's quite an interesting view of the same observation, but I think it's interesting to see that this pattern is also be seen if you combine a composite view seen on the aggregated 4 bars chart of the nominal 200-day cycles, a smaller one and a longer one, but both nominal 200 days. They show you this pattern here as a composite, which, again, I mean, cycles have some kind of beauty in its own. Yeah, so I just wanted to share that you could also see it as a kind of indicator, which that's what I wanted to show you. It worked since 2010, trading at 10 cent. So we have a pattern here, which is cycle 3 and a 5, which started to work out from Bitcoin 10 cents. But now we are close to 100K. So I'm not really critical about the downswing, as we expect the final up leg just to arrive, and now you see the exact date. So it might become an interesting summer for Bitcoin again, starting in March. So maybe now the next 4 weeks or 6 to 8 weeks maximum, we might see this nervous sideways, maybe some correction, but I would count it, I personally count it, no recommendation, maybe as a chance to get in, to prepare for the next upswing, to complete the pattern again. Okay, I think you might like that perspective. Now let's share what I call the master chart on Bitcoin. This is pure cycles. Now let's bring in everything else, what I just shared with you, and you might know this anyhow, or I've shared this kind of perspective several times. Here at the top, you see the seasonality, the yearly seasonality, which is the yearly pattern on the average behavior of Bitcoin during the course of a calendar year, just color-coded. What's important for now is that we are still in a bullish period which lasts until May. The upswing period always runs into May of the calendar year. So we are just in the middle of a very bullish phase anyhow. And if you remember, the next uplink will start in March. So the window from March to May will become even more positive perspective as we have the upswing in a still very bullish seasonality pattern for Bitcoin. Second, it's a little bit hidden here on that chart, but the previous halving took place in April past year, 2025, and I've painted in the 100-day period, where it's quite not to be expected that something important should happen, and also in Bitcoin, nothing specific happened. And now the window 400 days after the halving, which comes into play end of May 2025. And remember, the seasonality on the halving cycle told us to expect the most important upswing to happen around 400 days after the previous halving, which happens end of May. So the 200-day cycle will be in its upswing phase from March, May into summer. We have still the count of 5 to be completed. We have the seasonality, yearly seasonality, which is positive until May. And we have the halving cycle, which just occurs every 4 years, which is due in May, June 2025, with the highest expected upswing coming up in May, June this year. So from a cyclic perspective, I mean, waiting for this timing now since a year or even longer than. So this is nothing new and everything is lined up. We just need to be patient here at the bottom. You see now that the technicals are not really very positive on Bitcoin, but as said, we are in the downswing of that cycle. Bitcoin in general, by the way, is behaving very positive. It's just moving sideways. It has not really gone down. So we hit the 100K and then we are between 90 and 100K. Whatever, if you're coming from 50K or 20K, I mean, it doesn't really matter. So let's observe now until the technicals might come to a situation, and if you just project the technicals forward, let's consolidate a little bit for February, March, and then we're also from a technical perspective primed for another upswing just from the technical perspective. And now, last but not least, I told you in the intro, global liquidity, which is not here on the chart. Global liquidity, I've not pointed that in. But if you follow the situation with global liquidity is expected to peak mid-2025. Ta-da, here you have it. So we also have the peak of the global liquidity cycle to be expected to come mid-2025. So there's still room from the global liquidity perspective to also complete the upswing cycle, and the upswing cycle started at 2021 and is now running into 2025. Just global liquidity. Short term, global liquidity is pointing downwards. So also in alignment what you see currently happening in Bitcoin. But finally, we are still positive on global liquidity for Bitcoin. That's, as said, the data is not easy, but if you do your research, I think you will find the data sources. And if you follow Michael Hovell's work on Capital Wars, he is the expert on global liquidity and provides also a lot of information on global liquidity. So that's mainly it. So maybe just to sum my personal perspective, which I think I mentioned a lot of times here. So the summer period where we moved sideways was more or less the last chance to join that upswing cycle, which more or less perfectly started in September. You see that date here? So this is the upswing of the fourth repetition of the nominal 200-day cycle, which is going here into October, November, and this is where the bullish seasonality kicks in. So I don't know if Trump is really a root cause for the upswing we saw in October, November. Maybe it was anyhow a cyclic pattern, which just will come into play, and the news and media just need to find a root cause from the media perspective. But let's not speculate here. I'm just here to talk about cycles to you today. Yeah, I think we are ahead of very, very final late summer period for Bitcoin until the summer period. You need to watch out. This is the final and last up leg which might show up. So be prepared also to leave the train before something kicks in, but we could find another chance. That's my perspective. This is not any recommendation or forecast here. You know about that. But saying that, happy to take further discussion or maybe a joint discussion if you want.
Always a fascinating presentation, Lars. One of the questions was, how did you figure this out?
That's a good and important question, and I have an answer with you.
Yes.
Invest time. You need to invest time studying cycles. So therefore, a common mistake if you deal with cycles is ramping up a platform, and it doesn't matter which. You could use other platforms. The computer power just allows us, just by clicking, we will see a cycle. And then we might assume, it will top there, it will bottom there, I will now go long, go short. And that's a huge and big mistake, just trusting a computer showing you some kind of cycle. You need to study if that cycle has a kind of, Richard, what we also use, persistence. So has this cycle be there not only in one top, so in most cases have the major top been in alignment with that specific cycle top in a kind of walk forward analysis. So I mean, a cycle going backwards is always easy. But if you go backwards with the price history and then research if that cycle would show up before that top, so with out of sample data at that point of time. And this is what I did. Yeah. So I went back through each point in time and just with the data from the historical perspective to see, would the 200-day cycle again show up if we just go to 2017? And this is investing a lot of time in analyzing different clusters or different time frames of specific fragments of data. So not throwing in all data, showing what the computer tells me, like the persistence, statistical significance, backward checking if this is alignment. I think it was a week of work.
And then integrating the seasonality and integrating the halving cycles. I loved how you called that a seasonal cycle in Bitcoin, right? It's
Yeah.
not the cycle of the year, but it is a kind of seasonality in Bitcoin,
Yeah.
which is really interesting. And how you put that whole big chart together, that's a lot of work.
Yes.
And then you have to be monitoring that, in real time with the technical indicators, et cetera, right? It's not like, oh, there's Lars's magic chart.
No.
I just push button and make money. No,
it will not
that's
work.
not how it works. And that's not what we're here to
Yeah.
do. And
Yeah.
we are an educational 501(c)(3). Everybody that's presenting works very hard at what they
Yeah.
do.
Yeah.
And, we're sharing our research so others can do their research too.
Yeah.
So I think that's such an important point, and it's just great to see how much you put into this, Lars, and how you bring it all together. So many different threads. Fantastic. I appreciate it.
Yeah.
Others have asked, have you seen this same, 3-5-3 pattern in any other assets?
No, I haven't seen. I think it's a specific Bitcoin, maybe crypto, but no, it's Bitcoin specific. And you see that when you do this kind of composite analysis, which I shared today. So when you add these, and the only seen if you aggregate to 4 bars, this is a specific pattern in that asset class, which you could find similar patterns, but not specifically that pattern of 3 and 5 in that sense. Maybe, but I didn't have researched other asset classes now in specific related just to this pattern.
And was there any reason in particular that you used the 4-day aggregation, or is it just because that's what was available on the program?
I wanted to find something between days, which is too short, and week, which is too long. So you could also use three bars, but I mean, it was pre-designed to use 4 bars. But the main reason was for weekly, we don't have enough data because aggregating 7 bars into one will result into losing a lot of information on the long-term perspective. So something between 1 day and a week was just the goal to find.
And that, I hadn't seen that before when you used the 49 and 57, which is, like 200 to 228 day cycle.
Yeah.
And then as different variations or kind of extremes of the 200-day nominal cycle, and looking where they amplify each other and where they phase each other out. That was amazing.
Yeah. It's so interesting. And if you know the work from Dewey talks often about false cycles, which you might identify as like, which is not a cycle, which is just the result of a multitude of different individual cycles.
Right.
I think that was not exactly that, but related to that. So, and I have not searched for that specific, but it just gave me confidence from a higher perspective in that count of 3 and 5 to see it even combined when using 2 cycles.
Yeah.
So it was just again the confirmation on the
That
same
was
pattern
fascinating.
from a different perspective. So,
Yep. Good. Do you find it useful to sometimes just visually observe the price chart in TradingView and place cycles by eye?
no. I think you will be tricked by trying to do that. So you could visually misguide it by thinking that that is a cycle. The only thing which I would propose to do, you will find the alignment of bottoms of different cycles at major price lows. So and this is what you could use, because it doesn't matter which cycle, but in most cases all cycles synchronize their lows then at major price bottoms. So you could use it to fine tune the start of your data you put into the analysis. So, Richard, we're also discussing, what is the amount of data you put into the analysis? So where to start from the historical point of view. And we use as a standard the basic setting between 800 or 1000 bars just as a starting point. But if it could be somewhere in a downward or upward move. And if you change that point of the start to an important top or bottom on the price chart, that helps to get better results on the spectrum and cycle analysis, because you anchor the start of the analysis to an important price lower bottom. But coming back to the original question, I would not try to visually find cycles on the pure price chart. Price is just an aggregation of different cycles which you cannot spot.
All right. Mark is interested if you have any thoughts on quantum computing and AI.
That's a tough topic. Let's start with AI first, because quantum.
How do you feel this will affect cycle trading?
Yeah, it will, because maybe a short answer on that. It is a very interesting perspective. Right now, I think we as analysts or as humans sitting in front of a spectrum or a list of possible cycles, or even me using a week of analysis, checking different cycles of the historical for Bitcoin. This is what AI and tools used by AI will be much more efficient in the future than what we're doing here manually as humans sitting together. So I think our job, or what I just did, will be replaced by AI-guided computers in some time. I think that's the next level of cycle tools, maybe in 5 years.
I still think it's going to involve exactly what we were talking about just a short while ago, where you have to be the one that kind of decides which pieces to take out of that computer, right? And then to put together into your picture that lets you take the actions, that are going to work for you in your life and in wherever you're at, right? So, the AI and the advanced computing, they're powerful tools. They're definitely going to up our ability to do technical analysis.
Yeah.
But in the end, it's still always a person who chooses which things are meaningful and which things are going to, be set aside, right? So I think that always is going to be a factor.
Yeah, and on that way, I'm not sure where we end with that, because all the knowledge to interpret cycles, what is a good, what is a bad cycle, should I use that cycle, should I don't use that cycle, is that kind of experience we have as an analyst or cycle researcher doing this for over 20 years now. Or I need to follow the reasoning why a cycle has been selected or not been selected. And if I don't get that information at some point in time, because an AI quantum computer will just tell me, here's the cycle.
Right.
I will have hard times to use.
In a way, it's like us saying, here's the cycle.
Yeah.
Like we don't want to do that.
Yeah.
Because it doesn't work.
Yeah. So, and if a computer tells me, this is the cycle, Lars, it's not my world.
Yeah, exactly.
But it will come in some way.
Very good. Do you have, it was interesting too, I'm a little more skeptical that we might get a deeper correction in Bitcoin, but it was interesting to see this time what is really driving your idea that we might not get a deep correction is because we're in that bullish seasonality period and we're in the bullish halving period, which all kind of fill that gap up to the fifth, the
Yeah.
next bottom of the 200-day nominal cycle.
Yeah.
So you're just seeing other things that are sort of,
Yeah.
boosting up that trough in the cycle,
Yeah.
you know,
Correct.
all the way into the next, into ultimately the fifth cycle. So that was interesting to see.
Correct.
And do you have any upside projection on Bitcoin? Do you dare?
We are not here for price projections. We are here for timing and
I mean, if
settlement.
we looked at what happened in the previous iterations of the fifth wave,
Yeah.
it was
10
hundreds of
times. So
percent.
10 times.
So that would put Bitcoin, at $500,000 to $1 million. It's not, I mean, I have seen momentum, when I was looking at the longer term cycles in Bitcoin today, the peaks in momentum have definitely been coming down
That's
with
correct.
each
That's
wave,
correct.
going back to
You're right.
the
You're right.
all, what is this, the fourth iteration or the fifth iteration?
The fourth iteration.
Okay. So the momentum has been decreasing.
Yeah. So it's
The biggest peak was back with the first 5 waves.
correct. So, but I mean, even looking into that, so something between 200 to 500K is not out of the room.
Yep.
So,
Yep.
but I said, anyhow, I even don't like price targets. I think more to be on the right side is more important than having a correct price target.
There were some questions about book recommendations, of course, Cycles, The Mysterious Forces That Trigger Events. Really, this YouTube channel is probably just one of the best resources, period, for learning about cycles analysis. Lars and I do shows every Monday and Tuesday where we use the tools of the foundation to do cycle analysis. Lars has a couple of his own books that he wrote that I think are still available on Amazon, if I'm not mistaken.
They are still available. They are on a very early version of the tool set, which has evolved, and it's more about the technical way how to use it. So,
but we are actually working on an AI chatbot right now that integrates a lot of these books.
Correct.
And a lot of our presentations, and even gradually connecting it to the cycle analyzer itself. So that is a project that we're working on and are very excited about, and looking forward to sharing that more in the year to come, and particularly at our upcoming conference in June of 2025. So a little bit more on that in just a minute. Lars, we're at the top of the hour, and which I think is the top of the 24-hour period for you, because it's, what is it, midnight there now?
Close to it. Thank you.
Thank you so much, Lars. Fantastic work. And thank you for all the work you've done to advance the foundation's mission and tools. Really, we could never have done it without you.
Sure. It's a pleasure to be here. Thanks everyone out there for taking the time with me. And Richard, good presentation to take it away from here.
Thank you.